Okay, we're going to do an in-depth analysis of Bitcoin's price action. The messages I'm getting from people, people sending messages, say how low is it going to go? Where is it going to stop? Where's support? And so I'm going to share what I'm seeing. Obviously, I don't know. Nobody knows what's going to happen. I'm just going to share what I'm seeing, my analysis, and as always, if you trade based on this analysis, you will lose money. The only thing I recommend is buy and hold for at least 5 years. And I believe you will be happy with that. At the same time, study it. Because if you don't understand it, you really shouldn't own very much at all. Okay, so we're looking at the monthly candle. And this may be a little longer than previous analysis videos because we're gonna just start from the basics, really the foundation. Today is the 5th of February 2026, and as you can see, we've had 4 straight monthly down close candles, and now we're 5 days into February, and Bitcoin is already down $12,966 and counting. That's 16.5% just in the last 5 days. That's pretty big. Now, let's start by looking at the dealing ranges. If you've watched previous videos or if you're familiar with ICT concepts, which is where I'm getting this method of approaching price action, dealing range is a very important fundamental. And we look from the swing low to the swing high. We have a current dealing range, an intermediate dealing range, and the full range dealing range. And from the low here to the all-time high, from the low here, the swing low here, we have right, this low is lower than the two to its each side, also to the all-time high, and then from the October or November 2022 low to all-time high. Now, the reason we mark off these numbers here, so the 50% of a dealing range, a retracement to 50% is very important. So that's always an area we call it equilibrium. We want to be aware of where that is. As you can see, it tends to attract price. We'll see more soon. Also, between 62% and 79% retracement, so that would mean price went up and then retracing back down. Often, price will come back to that area. ICT calls that optimal trade entry if we're going to continue long. So if you have a trend, price will often retrace into optimal trade area, optimal trade entry area, which is, again, usually between 62 and 79%. Before that's the optimal place where you want to position yourself to long to continue in a bullish trend or short to continue in a bearish trend. But what we have here is not a continuation. As you see, we've already closed below the low of this dealing range, and therefore this dealing range is really no longer valid because we've closed below it. We've now moved from bullish price delivery into bearish price delivery. We're going to study that a lot more. Before we do, let's look at the intermediate term range, and that begins the low of August 2024, and that is at 49,577, and it goes up to the all-time high at the all-time high was 126,272. Okay, now, if you see optimal trade entry over here, we're already in above the 50% of is called premium, below is called discount. We are in discount even of the intermediate range, and we are inside the optimal trade entry range area, quite far down inside this dealing range. So if we continue, we might end up below the lower end of the dealing range, although we do have another $15,000 to get there. Hopefully we don't get there today, but that's what we're looking for here. So we want to see what happens. We'll come back to that again shortly. Then we have the full range, where this is the low of approximately 15,479. That's the low that Bitcoin put in after declining from its prior all-time high of 69,000. We came all the way back down to 15,000, which is a retracement of, what was that? That was a retracement of about 77+%. pretty significant, before going off, making a new all-time high, retracing a little bit into this BISI, buy-side imbalance, sell-side inefficiency, a bullish inversion for value gap, and then using that as support, continuing higher, a new all-time high, retraced into what was a BISI over here. When we close below it, it's removed, and then we continued into new all-time high, and so on. Now, if you've been watching my videos over the previous months, maybe a year, I'm not sure, then you probably have noticed, and we'll go down to a lower time frame, that from around 108, 110, I think, I have been expecting lower prices. We're looking at this on the monthly basis. On the weekly and daily chart, which is what I was looking at for the most part, this was a lot of chopping around. We'll go down there to those low time frames and we'll look at that more closely. But the question everyone wants to know is, how far are we going? What are we looking for? So today we dropped below equilibrium, which is the 50, maybe it was yesterday, 50% mark of the full dealing range. So we are now in discount of the dealing range. When you are in discount of a dealing range, you want to start to look for signs that that price is that is starting to curl around and go bullish, or turn from bearish delivery to bullish delivery, and start to look for signs that price is going to curl up. Because ideally, you want to go long in discount, that's below 50%, below equilibrium, and go short in premium. Now, with what we're doing, at least me, I don't go short Bitcoin, only long, and I don't sell it. So it's kind of, we're just looking at this from the perspective of ICT concepts for those who find it interesting, like I do. Anyway, let's go down to the weekly and the daily and the 4 hour to see some of what we've been looking at, and then we'll probably come back and zoom out again. First thing, if you've watched the last 2 or 3 videos, we were looking at this price action here where we were consolidating between the 17th of November, this is a weekly chart, and the 12th of January or the 19th of January, although we'll see, we already started our descent. Okay, so one more thing. When did I start talking about going lower? Whoops. We made these highs, came down, made that new all-time high, and then very quickly we have this bearish leg that closed below this final bullish leg. And then a little bit later around here, which is the week of November 3rd, where we were at 109, we closed that week at 104. And sometime during that week, it became clear to me that we were closing below this leg up as well, this whole final bullish push up, and that makes this into a bearish market structure shift on the weekly time frame. Now, we had a bearish market structure shift on the daily time frame even prior to that. It's coming back over here, or approximately, just a little bit earlier. So on Friday, 17th of October, we had a daily candle close below, or actually even over here, we had a daily candle close below the open of this final leg higher. That would qualify as a bearish market structure shift. So wherever you want to put it, it's not too far, but I tend to look at Bitcoin on the higher time frames because that's the way I'm approaching it. I'm not short-term trading it. Once we had this close below this leg up and certainly below that leg up, it was time. I started to expect bearish price delivery. As you can see, we were in the range of about 107,000. And when we started coming back up over here and then we rejected, that was reinforcement. And we came back up over here and price respected the SIBI here. So even though we came back up, I was not yet seeing signs of bullishness. I was seeing this as a retracement into this daily SIBI over here. Mark that off with a box over here. And you'll see that we respected 50% of the SIBI, right? That line there is 50%. We didn't even wick above it, let alone have bodies close above it. The bodies of these candles were not above the bodies of these candles, this, right? All that is showing weakness. And that's why all the way up here, I was saying we have to, we'd have to wait and see if we're going to all new all-time highs. But until we now start to see signs of bullishness, I was expecting that we're going lower. Where would we be going lower? Well, we'd be going lower to take out this low, from June 25th. And then we'd take out this low, and then we'd be looking for taking out this BISI, and so on and so forth. And I had all kinds of the various levels marked off. I'm quite sure I deleted some of these because of clutter. And step by step, we've been stair-stepping down until we came to this low here from the week of, from that is the day we're on daily now, Friday the 21st of November. And we put in that low in November, and that's when we first started to see some retracement where we wanted to, again, we're in bearish price delivery until we see signs of bullishness. And this whole time I was saying my expectation is that we're going to we're going to take out the November low again and probably continue lower after we do a retracement or we did consolidation. I also said around over here that I expected that once we do move lower, it will be with speed and force, big candles. Now, it took a while, from Friday, the 21st of November, all the way, I guess, depending where, till end of January. So November, December, a couple of months. And over here, this last one, I had been addressing just the bearish scenarios for the most part, but over here I addressed what I would want to see if Bitcoin was actually switching from bearish price delivery to bullish price delivery. And what I said is that we're starting to see a nice, how do we know if it's just a retracement setting up for going lower, or if we're actually turning bullish? And one of the things that I said I'd be looking for is that I'd want to see a close above the SIBI here. So the daily SIBI here, we have the weekly SIBI as well. Let's zoom out. I'd want to see, actually, let's stick to the daily for this. We would want to see that Bitcoin would come up. We created this bullish order block by closing above these set of down close candles. All right. But how do we know if we're just coming up here to take out liquidity above these engineered highs, or if we're starting to see bullish price delivery, as I said? Well, I would want to see we are down here in this dealing range, right? So 50% of the dealing range, we're still in discount, right? Which is where you'd want to get long, ideally. Another way we can draw this is with the dealing range to this swing high, right? In which case we came just shy of 50%. Right? We can also draw it up to this swing high, in which case, what did we do? We came up into between 62 and 79%. That is optimal trade entry for going short. So we see that, as I talked about earlier, price retraced up into optimal trade entry of the most recent dealing range before turning over and crashing, okay? What I would have wanted to see if we were switching to bullish price delivery was a close above this, the daily SIBI over here, which I'm just going to copy this and show you where that actually, it's the one, it's just kind of, it's inside the weekly. Let's make this. Okay, the weekly you can't see on daily anymore, but we came up into this daily SIBI over here, right, which is also inside the optimal trade entry. So if you're going short, this would have been the optimal place to go short if you weren't already positioned from higher up. Okay, see this sell side imbalance, buy side inefficiency. We respected it, right? We wicked up to the top, but no bodies closed above 50% of the SIBI, the daily SIBI. And then we came down and then we just closed very, with great energy below the final leg up, making this a bearish order block. Now, at the time we closed below here, and I pointed out in 2 videos ago, I believe it was, and then also in the last video, that this over here becomes a bearish breaker because we have a high, and a low, and a higher high and a lower low. And then we expect price will come back up into the bearish breaker. If we're going lower, we want to see price respect it and then roll over and go lower. And that's, I pointed out, that's exactly what we saw. We saw price chop around in here, but we see no bodies above the 50% of this bearish breaker. We see some wicks, and there's like, the bodies don't even make it into the above the bottom quarter of this bearish breaker. So again, we came back up, we rolled over, right? Took out liquidity below these candles over here, right? These put in sell side liquidity here, took it out, came back up, right? Rebalanced some of the imbalance there. And then on Thursday, the 29th of January, we crashed lower, taking out liquidity below this level. Now, these are all levels that I had previously drawn on the charts. This actually seems to have gotten moved. It says November low, and it's not where it should have been. So these are all the levels that I've been talking about in the videos prior. I'd marked these off. You can go back and look at them, although you probably have to be really bored to do that. And these are levels where there's liquidity building up, sell-side liquidity building up below these relatively equal lows. And what happens is that when the markets build up liquidity below these lows, price is going to move with energy to take out that liquidity rapidly before people have too much time to change their minds. So that's how the algorithm works as ICT teaches it. So we had this consolidation, a bit of retracement, taking out liquidity above here, retracing into the optimal trade entry, which overlaps with this daily SIBI, respecting it, rolling back over, closing below this final leg upwards, showing a bearish change in state of delivery. If we're just looking at this, we're already in a higher time frame, weekly bearish state of delivery, bearish price delivery, and also in daily if we zoom out. But now also in this particular part of price action, we have another over here, that would be another change in state of delivery when we close below the open of the final push upwards. So from here, we expect bearishness. As we said, we got that. We took out this low and these lows. We chopped around a bit and continued lower, closing below this daily BISI, buy-side imbalance, which had previously provided support, as you see over here. And this also had previously provided support. Oh, wow, we just had something added here, it seems. A yearly SMT with Ethereum. All right, I think that's been there. And when we find these PD arrays, premium discount arrays, start to be used or violated, then we expect them to be previously there a premium PD array, which was a discount PD array, which was being used for support to go higher. Once we close below it and start to use it as resistance, as we did over here, right? This big, we look over there, we start, as I know it's a bit of a mess, that's why I rolled it backwards. Anyway, that's the area we start to use it as resistance. Go below it, come higher, resistance. That is showing strong bearishness. And this I could, of course, change to the pink boxes, because that was what would be appropriate. I'm just not going to waste your time on this video doing it now. I'll do that afterwards. Okay, I'm also going to start taking these things off here because let's clean up the mess. I've just been leaving them on, waiting till we had a chance to record this video. All right, so the last few days have been just brutal. Let's see, 5 days, right? And I posted some screenshots in our community every day, just updating what I was expecting. Now, what about where from here? Let's go back to weekly. Oh, actually, I want to, before we do that, let's go to monthly. All right, so in terms of monthly, where from here, how low are we likely to go? So I'd marked off the full range EQ, the 50% from the 2022 low up to the all-time high, and that is over here, 50%. There's a really good chance that we're going to go down to optimal trade entry between, for this full range, because we are right now inside the optimal trade entry area on the intermediate range. We'll have to see what happens next. So if we continue going lower, we may take out the low from August 2024, which is 49,000 or so. We may do that. We still have an imbalance over here, a pretty significant imbalance. Although this order block may provide support. Now, the answer to those who are asking, well, where is support? I don't know where we're going to find support. All I know is that there are things that I'm looking for. There are points of interest where if price starts to pause, I will start to look and see if we're going to, if I'm starting to see signs of a reversal, just like I was doing over here, as I mentioned earlier, right? Price pause, we started to consolidate, and then I wanted to see signs of reversal. But in the end, all I saw was signs of retracement. We just didn't follow through enough. And that's why, I never changed my bearishness to bullishness. So what are the points of interest that we may hit? This gray box here aligns with the optimal trade entry area of the full range. I would not be surprised if we go down into the 50s, let's say somewhere between 57, 400 and maybe 48, 800, let's say 49. I would not be surprised if we go into this range, but what we do there, I don't know. Like, how long will we stay there? We could wick down there and then pull right back up, as we did, I think it was here. Yeah, over here. I actually had an order. I remember this because I had an order to buy like $20 into this. I think it was a 4-hour bullish BISI that this is when I was still marking these on the charts. Let's see. I think it was, I guess I didn't mark it. It was like one of the last ones that it was after I stopped marking. But you see here, I put in a buy order right above this BISI, which I think is, what is that? It's the daily BISI. All right. I put it right above, and we came in like it was like a $20. Then we went up, came back down, didn't go. And of course that feels good. And people think you're a genius, but I wasn't. I was just using what I'm sharing with you. I knew that sometime that we may come down to the BISI, and we may just stop right at the top. So I wanted to have an order, and what I've been doing was putting in, numerous small orders to take it higher. Okay, so let's go back to monthly. One second, where's that? Oh, I see, it's only on weekly. Let me make this visible on monthly. All right, so as I was saying, we may come down just to maybe the top of this, or we may come into the middle of it. We may keep going, but there are various things that may cause us to find support between, let's go to monthly, between this blue line here, 64,248, and all the way down to 38,900. So let's say between 40 and 65. There are various points of interest that could provide support, including what I've marked off 2, 3, 4 months ago. I don't remember. This bullish order block. So the bullish order block is the final down close candle in this consolidation over here before price came and we had a monthly close above. Oh, what I forgot to say in the monthly, we are right now, with the close of January, we are finally in bearish price delivery, not just on daily and weekly, but also on monthly. And that's because we finally have a monthly close below the open of this final leg higher. Okay, so that puts us in monthly bearish price delivery, which means it's probably going to take a while to get out of this. If we had stayed in weekly, and certainly if we had stayed in bearish in price delivery on the daily, we could expect that but monthly remained bullish because we never had a monthly close below the final push upwards. Then we're still technically in a long-term bullish price delivery structure. But now we're in bearish, and there's no one really knows for sure how low it's going to go. So that's back to what I was saying. It could be that we find support inside this order block, which has, from let's say 64 and change down to 50. So that's at $15,000, which also overlaps with this BISI, and it overlaps with with the optimal trade entry from the full length um, dealing range. It also overlaps with this BISI, which has provided support prior, which may again provide support. It also overlaps with the top of this whole leg over here. So we had lots of activity around here, lots of buying and selling um, on this whole leg down, which arguably this whole thing also would qualify as a bullish order block, I believe. And so it's hard to know, and certainly, what I'll be keeping my eyes open on the lower time frames. I'll be looking to see how price reacts to those areas from the monthly bullish order block down for, let's say again, so that would be between 64,000 and 38,000, let's say 40,000 or so, right? Will we go lower than that? I don't know. It's possible. We might just wick below something and come right back up, consolidate, and maybe after a few months start to curl higher. That's certainly a scenario, certainly very possible. But what looks to me is that a good chunk of 2026 is likely to be bearish and disappointing for people looking for Bitcoin to be moving higher. I personally am not at all bothered by this. When you study Bitcoin, you understand it, and you're in it for the long run. These are buying opportunities. So what you should do, I don't know. I think you should study it and then make your own decisions. I'm just providing my analysis for those who are curious of how I see the price action using ICT concepts. But again, if you trade based on my concepts, assume that you will lose money, all right, based on my analysis. All right, so coming down to daily, we see that we came with strong displacement below the full range equilibrium. We're now down to 66 to 307 or so. It looks like we're going to probably hit the order block level of 64 to 48. I would expect that in the not too distant future. Again, just because we're in bearish price delivery, we have there's a good chance maybe we'll go take out the low at 58,941. I don't know. I'll maybe add that to the chart afterwards. Now, let's also take a quick look at, what is this? All right, MicroStrategy. Now, this is just a story of learning to trust your judgment. I have a small group of a few people that we're discussing, trading, and I'm just sharing my journey as learning to read price action. One of the people in the group was day trading MicroStrategy, and we were up around over here, July of 2025. It was June or July, because at the time I said I see these relatively equal lows all the way down at 359. It seemed to me that we were likely to go there, but we were already at 400, and I hadn't ever really looked at MicroStrategy, just started looking at it, and I didn't really trust my judgment. But then we came down there, and then at that time, somewhere around that time, I started to look lower, and I saw that, well, we have relatively equal lows down here, but that's so far away. That's 232. And I looked all the way down here, and I said, that takes us all the way down to 100. And I just didn't, that's what my analysis was leading me to, but I didn't have enough experience to trust myself. And that's a big part of learning these skills, is that you got to do, study, and then you've got to do your time analyzing based, figuring out for yourself and maybe with others what you're seeing. But it's only with time, half a year in this case, that you get to see whether your analysis was right or not. So for me, it's building my confidence in my analysis. And I just find that, whenever you're working hard at something, it's good to have, it's good to know that yes, what you were seeing had validity, even though at the time you didn't know to trust it because it seemed so far out. So we are now at 110,000 on MicroStrategy or strategy now. I fully expect that we will soon be below 100, which is the low of, when is this? This is April 2024, the week of April 2024. What will be after that? I don't know. Same things. Maybe we'll come and take out the 43.31 low. I sure hope not, because that's really low. But it's similar to the arc of Bitcoin itself. All right, this has been a much longer analysis than we've done before, but because of all the excitement, I felt that it was warranted. If you actually watched it this far, let me know. I'm interested.